Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. Crude oil slumps to lowest levels this year under vacation first. Investing.com average prices slump Friday falling to the lowest levels this year, with big news vacation first, which would curb the downward demand as well as the surging dollars. By 9/20/80, further traded 4.6%, lower than 79%, and the barrel to Brent contract fell 3.8%. The two benchmarks were down 5.1% and 3.7% respectively over the course of this week, heading for the fourth consecutive weekly close. The market has been hit by the aggressive monetary tightening by a number of central banks led by the U.S. Federal Reserve as they try to control inflation running at their historic highs. The Fed policy market made it clear they are prepared to tolerate U.S. regulation in order to curb soaring prices, and this view seems to be a prevailing one of the likes of the European Central Bank and the Bank of England. Adding the difficulties, the Canada Bank in the facing in the strength of the U.S. currency with the dollar's index rising in the highest level in 2 decades. And this makes the commodity more expensive for the buyers. With the explanation of only further monetary tightening in the months ahead, commodity markets are likely to face some strong headwinds. Analysis in ING said and notes the domestic of the USD at the moment will only add to these headwinds. These factors overshadowed the concerted U.S. escalation of the war in Ukraine by announcing the biggest mobilization in the first since World War II, with the further limited supply from the major supplier of the crude. EU member states they expect to meet over the weekend to discuss passing ahead to the price cap and the Russian oil, and the attempt to come a preliminary agreement by early October ahead of the EU leaders meeting. Getting all the members to agree on the price cap could be pretty difficult, just like we saw the EU ban the Russian oil, which was watered down to include only the seaborne trade. ING added. EU members will be want to come a final decision by 5 December, which is when the ban of the recent seaborne crude into the EU comes into France. Additionally, the trade that OPEC and the allies made the cuts prediction when they are next meet in the early October after making a symbolic Canadian oil output target of 200,000 barrels per day last time, the having a little impact. A box in already producing more than 3.5 billion in the barrels a day, less than official output of quotes. The banker has reckoned of TC passing data run of the weeks likely in the season. Always plunged and 8-month low and the strongest dollar reaction first. New York already the plunged playing about 5% to an 8-month low in Friday as the US dollar hit its strongest level in more than 2 decades, and on further rising interest rates it will tip a major economist into vacation cutting demand for oil. Further falls 4.31% on the $4.8 to settle at $86.15 a barrel, down about 6% for the week. US West Texas Intermediate WTI crude fell $4.75. It was a 40th straight week of the declines for the benchmark, the first time that has happened since December, but when technically over austerity with WTI on track for the lowest settlement since January 10 and Brent for the lowest since January 14, rising in the highest level in 2 decades. And this makes the commodity more expensive for the buyers. With the explanation of only further monetary tightening in the months ahead, commodity markets are likely to face some strong headwinds. Analysis in ING said and notes the domestic of the USD at the moment will only add to these headwinds. These factors overshadowed the concerted U.S. escalation of the war in Ukraine by announcing the biggest mobilization in the first since World War II, with the further limited supply from the major supplier of the crude. by 9/20/80, further traded 4.6%, lower than 79%, and the barrel to Brent contract fell 3.8%. Maybe that's all from me. Don't forget to like, comment, share, and subscribe.